of Tesla slipping further in extended trade after it reported its lowest gross profit margin in more than 3 years. That's as a recent wave of aggressive price cuts dented the EV maker's earnings. Q1 gross profit margins dipped below 20%, the lowest since 2020 when the pandemic hit. But Tesla claims these margin cuts are manageable and that the company is taking a long-term view. Well, Tesla slashed prices on its vehicles last year to lure more buyers in the face of rising competition and a weak economy. It cut prices on its EV 4 times in the quarter and twice so far this month. And now those lower prices are hitting the company's sales and profits. Well, Tesla reported a Q1 revenue of $23.3 billion, slightly above estimates. Net profit dropped 24% from the year before, translating to about 85 cents per share, which came in line with Wall Street estimates. And Craig Irwin, senior research analyst at Roth Capital, joins us now. Well, Craig, Tesla feeling the pain of its price slashing campaign, which pushed its Q1 margin down. Ahead of this earnings report, it announced new price cuts again. So where is it going?
Man, 6 rounds of price cuts since the beginning of the year for the U.S. market. If you look at the base Model Y that they sell, it's now 29% cheaper than at the beginning of the year. That is a big move. There's more price cuts to come, right? They did say on the call that they're willing to continue to use price as a tool. And I think the reason we saw the sell-off deepen in the aftermarket is the commentary from Mr. Musk about being able to get accretion from FSD, the full self-driving features, and autopilot in the future. I don't think that resonates with investors. Investors want to see margin on the vehicles. So as a growth stock where you're growing, not at the rate you claim you're going to, growing the top line, sub 20%, and then having the bottom line down by 20% year over year. That's a big problem. It's a very big problem. The first thing for growth stock is to actually grow the top line. So he has to cut price to do that. Now, the question is these 100 vehicles coming to the market, how big a problem is that for the rest of the year? So lots of issues at Tesla. Still a great company. Still EVs are inevitable. But Mr. Musk has some real issues at his hand to deal with.
Yeah, I do want to follow up on some of the things that he's just said. So in the conference call, he's saying that, orders are in excess of production. So will they still need to implement that affordability at scale strategy that he's been talking about?
So I personally believe that if orders were so far ahead of production, there would not be any price cuts, right? So call me a skeptic. The new manufacturing approach that they're talking about, I happen to think that there's several OEMs that are looking at modular manufacturing. It's been done in many different ways in different manufacturing formats across the automotive industry for years. So if they're going to do something transformational, I'm going to say that quite likely this is available to most of the other global OEMs. So not sure this is really going to be able to take cost out the way that he's dreaming. What he really needs to do is focus on making great cars, making them compelling to consumers, which he's done a good job of. But now he's got some real competition out there, and the consumer's facing a little bit of a challenge as far as affordability. So it's a tricky setup for Tesla. That's why we're bearish. And that's why we've encouraged people to look at other names as plays in the broader electric vehicle industry.
Well, Mr. Musk has also highlighted that this is a good time to increase Tesla's lead further. So what other profit centers can the company tap into, especially given that competitors, they're also ramping up their EV production?
So, he makes a lot of assertions, right, as far as technology leadership. But if you look at his comments on the most recent Investor Day about 75% reduction in silicon carbide content, really, he's looking at a very old unit. It was designed many years ago. State of the art from other OEMs coming out today is actually already down basically 75% already. So I just want to caution people about this whole technology leadership thing. There's phenomenal companies in Asia, in Europe, and in North America that have the engineering capabilities to do exactly what Tesla's done. There's nothing Mr. Musk has in the battery world that's not available, in China or in Japan or South Korea. I think that the leadership there is something that's going to be eroded this year, particularly by all the new models. Some of them will be highly compelling, and we probably will need to see more price cuts if he wants to get close to his 4% growth rate for the year.
Well, other key earnings are looking out for is Morgan Stanley, which wraps up the big bang earnings this season. What is your assessment on their performance this season? How have they weathered last month's turmoil? And can we say that the worst is over for the banking sector?
Oh gosh, so I don't cover the banks. I work in an investment bank, so my compliance would get very excited if I talked about Morgan Stanley stock. What I can say is the electric vehicle sector has been quite volatile and will probably remain volatile. But electric vehicles should continue to grow quite nicely. Tesla's established the market. They've really demonstrated that the broader market has impressive growth ahead. I think most people today agree that EVs are inevitable. I just see Tesla as significantly overvalued, and I think that there's a variety of other ways to play the sector that offer a better investment opportunity.
Well, thank you for joining us this morning, Craig Irwin, there, Senior Research Analyst at Roth Capital.